So yeah, happy to spend a couple of minutes with you guys to just provide a little bit more context. You all heard the president discussing the employment report that we got today, so I just wanted to provide a little bit of additional context on how we are looking at that data in the context of what we've seen over the course of the last couple of weeks and the last week in particular. So obviously a strong and encouraging jobs report today, 850,000 jobs created last month. That takes us to more than 3 million jobs created since the president took office. Under the hood on that, I just want to raise a couple of issues. First is, in addition to a strong job story today, we saw a strong story about wages. Wages for workers. Average hourly earnings were up 3.6% over the year. And if you take out the pandemic, some of the movements in the pandemic, we've seen the largest 3-month increase in wages on record. Records go back to 2006. And so I think what we're seeing here is a labor market where as employers are increasingly looking for employment and jobs are plentiful, they are paying higher wages and people are taking jobs at a faster clip. Good news on both fronts. The second is, as we look, there's the payroll survey and the household survey. The household survey is what feeds into the unemployment rate. A couple of things under the hood in the household survey that may be of interest to you. First is around labor force participation. We saw an increase in labor force participation among the prime age working population. So for those workers aged 25 to 54, we saw an increase. And in the pandemic, certainly because of some particularities around teenagers and also early retirements, that prime age workforce is particularly relevant, and so we keep an eye on that. The second is, if you look at the broader definitions of unemployment, which have been particularly something that we and others have followed over the course of this pandemic, one notable thing this month is a marked decline in the number of people who are working part-time for economic reasons. So this is a category that the Bureau of Labor Statistics tracks, where people would like to be working more hours, but are only employed part-time. We saw a 644,000 person decline in that figure over the course of this past month. Again, a sign that those who are wanting to work more are having an opportunity to do so. I would also note that there was a slight uptick in the number of long-term unemployed. That number has come down since the president took office, but that's an issue that is a reminder that we continue to have challenges in an economy that is coming back from a historic pandemic, and we are still down more than 6 million jobs from where we started, so we still have a lot of work left to do. Third point is just to put this report in the context of a set of economic data and indices we've seen over the course of the last week in particular. It's been a heavy week for economic data, so just a couple things I wanted to flag. We saw consumer confidence come out earlier this week, and not only did we see the index increase for the 4th straight month, at very high levels now in terms of consumers' current and future sentiments about the economy, but a record level of consumers are seeing the job market as improving. So in fact, the share of consumers that say that jobs are plentiful in the economy is now at a 21-year high. So again, consistent with a strong recovering labor market here. We saw both the Congressional Budget Office and the IMF come out this week with updated growth projections. The CBO, in particular, doubled its projected growth for 2021 from 3.7% to now 7.4%. And that's if we achieve that growth in that range, it would be the highest in nearly 40 years. But also notably, the CBO not only increased its growth projections, but projected downward where unemployment will be next year, and also downwardly revised its projections for 10-year deficits. So actually, as its growth estimates increased, its projections for future deficits as a share of our economy came down from where it was projecting in February. Likewise, on the IMF front, projections of growth at 7% for the U.S. economy, and in their words, the fastest pace in a generation. Also this week, notably, we saw the OECD reach an agreement with 130 countries endorsing a global minimum tax of at least 15%. This has been a priority for President Biden and our economic strategy from the beginning of this administration to try to help to galvanize a global effort to actually end the race to the bottom on taxes and to encourage multinational companies to invest and compete on quality and price and not on the effectiveness of being able to strip profits into low tax jurisdictions. A historic announcement this week and an important milestone in our effort to get that done this year. Number four, and then I will take your questions, is I just wanted to also let you know in terms of actions that we're focused on to try to help address issues that consumers are facing, increased competition and lower prices. I want to confirm that there was some reporting this morning that the President is indeed intending to direct the Department of Transportation to engage in a series of rulemakings to protect airline passengers and to promote fair competition in the airline industry. This may sound esoteric, but I'll make it very simple, particularly for any of you who have flown or are intending to fly now that that's more available. These rulemakings will specifically ensure that if a passenger pays to check a bag, they should get that fee back if the bag doesn't arrive on time. Also, if the passenger pays for a service like Wi-Fi and it doesn't actually work, that you will get that fee back quickly. And also, the President will direct DOT to ensure rulemaking that will establish clearer upfront disclosure of fees. One of the challenges in being able to clearly understand baggage fees, change fees, cancellation fees at the time of the purchase of an airline ticket, so that consumers have more and better information in understanding what they actually are paying for. And that this direction will be part of a broader effort that the President will release shortly around driving greater competition in the economy in service of lower prices for American families and higher wages for American workers. So with that, I'm happy to take your questions with one caveat, which you will hear me say every time I come to talk about monthly employment data or anything else, which is every piece of data is uncertain. We don't put too much stock in any 1 month's data. We're looking at longer-term trends, and certainly as we assess the trend over the longer term, we feel like we are seeing a strong and accelerating recovery connected to and driven by the President's economic strategy.
Josh.
So, good news on hiring, but we saw an increase in black unemployment. Unemployment for black men is about 10%, almost double what it is for white men. Do you expect to close this gap? And which policies are going to be the most important for getting that?
Well, I'm glad you raised the issue, and certainly it underscores why it's so important to not let up on the strategy that we've been putting in place to drive a strong recovery as fast as we can to get to full employment. One of the things that we know is that one of the most powerful ways of actually addressing disparities within the labor market, and particularly the persistent gap between unemployment rates for whites and people of color, is to have a strong economy that is operating at full employment, where employers are seeking to have a wider scope, and people who want to enter the labor force, want to find jobs, have more options and have more leverage and have more power in the labor market. So you've heard the President talk about this. He went to Cleveland and laid this out in a speech, that an explicit part of his strategy is to have policies in place to get us to full employment as quickly as possible. I would note to your question about the most important policies. The American Rescue Plan was unique across the world in terms of fiscal responses to this pandemic crisis. The United States stepping in and having a more aggressive fiscal response than almost any country in the world. And what you've seen as a result is that most independent projections pulled forward by a year or more their projection of when we will get to that full employment. But as we assess what it means to get to a full employment economy, we believe it's critical to look at that from an inclusive perspective and not just look at the headline unemployment rate and recognize that these persistent barriers that have driven those divergences in employment outcomes need to be at the center of what we're trying to address and part of what we want this economic recovery to achieve.
Andrea? Yeah, Brian, I wanted to ask you about the OECD tax agreement. Are you concerned at all that that could get held up, that the U.S. could have trouble enacting its part of that? And also, there were several countries that are in the European Union that didn't sign on. Is that going to be a stumbling block to actually make it happen?
So we see the announcement today, or this week, as both a historic milestone and really important momentum to actually achieving both of the elements that you said. Momentum to enact a corporate tax reform in the United States that would not only help to improve U.S. competitiveness by making it more attractive to invest here in the United States rather than invest in shifting production and profits to low tax jurisdictions, but also raise revenue that we could invest in productivity enhancing measures like investing in universal preschool, along the lines the president has laid out. And in fact, one of the principal arguments against the kind of tax reform that the president has laid out is, well, if the United States acts, what happens if the rest of the world doesn't come along? Well, with this OECD announcement, we're actually demonstrating that the world is prepared to do that, and obviously it connects to a set of constructive conversations we're having with leadership and the relevant committees in Congress right now about moving forward the president's corporate tax reform. And this is a process. To your question about the remaining countries, this is a process. We saw at the G7, there were questions, would the G7 come along and endorse this framework? And of course they did. Now we have the 130 countries endorsing this framework, and we're going to keep working at it. We're not there. This is a milestone in the process, but a real strong signal of momentum toward the ultimate goal.
Hey, Brian, Brian, I wonder if you could address that competition initiative that you mentioned. Give us a little bit more flavor of what's coming on that. And then secondly, I wonder if you could address that the chip shortage is still hurting. Ford, for example, is down 27% in June. How much of a drag do you think that's going to have on the otherwise rosy outlook you just presented?
Sure. So on the first, I would say I won't get ahead of the president. You can anticipate the president's going to be having more to say about this shortly. It's an issue that we've been working on across the whole of government, and the actions that I outlined with respect to the Department of Transportation is one element of it. But I think at the core, just this is really about trying to recognize that actually having more competition and more competitive markets is actually key to driving strong, durable, shared economic growth. And in particular, we've seen increasing evidence that the lack of competition in a variety of markets can actually reduce choices and increase prices for consumers, for small businesses, and actually also hurt wages and wage growth for workers in the labor market. And so we're looking at an effort across the government, looking at the different antitrust statutes and the different measures that agencies can take to try to improve competition and actually improve the opportunities for businesses to compete fairly without being impeded as well. So we'll have more to say about that, but that's the basic contours of it.
Just chips.
Oh, chips. Yeah. So look, this has been an issue that we've been focused on for some time. It was a focus of the president's 100-day supply chain review, and we've been in constant and close contact with the auto manufacturers, consumer electronics producers, and also then the chip manufacturers themselves. I would say in the short term, I think we're hearing signs of there's some improvement in the challenges. I think the second quarter clearly was a point where you saw that impacting both on the production side and the employment side. At least the indications we're hearing from industry participants is that you should expect some improvement sequentially over the second half of this year. From our perspective on the policy side, it's why we're incredibly focused. You've seen the president laser focused on trying to move and enact his proposal for $50 billion to invest in semiconductor production, manufacturing, and resilience here in the United States. That's the long-term answer to this issue. And that's passed through the Senate. We're now working with the House to try to advance that legislation as well, and we look forward to getting that to the President's desk as soon as possible.
Courtney? Oh, sorry, Jeff. Sorry. Just to go back to full employment, what are the metrics that the administration will look to determine when the U.S. has reached full employment? And then on manufacturing, why are manufacturing jobs lagging so much, up only 15,000 in June and still 480,000 below pre-pandemic levels?
Well, I'll take the second half of your question first, and obviously we can have a glass, and maybe it's half full, maybe it's half empty. But I would say sequentially, what we've seen is progress in the manufacturing sector, both in terms of employment and production, and it's important to remember, where we're coming from. We had a pandemic and a historic economic crisis that cratered production and has created huge supply chain challenges and bottlenecks over the course of the economy. But I think what we're seeing now is demand has come back faster than anticipated, in large part because of the success of the vaccination effort and the historic fiscal response that the United States has taken. And you're seeing manufacturers respond, and certainly there's going to be some short-term issues to work through. But I think part of the job growth that we saw in June is reflective of the sector's ability to start coming back here. And the first half of your on full employment. So look, our approach is to look at this from an inclusive perspective. Our approach has been to say, what does it mean to actually have an economy that is working for everybody, and where workers who want an opportunity to be full participants in the labor market have that opportunity. That means not only looking underneath the hood of the traditional unemployment rate at the significant discrepancies we've seen historically on racial and ethnic lines, but also on parents and women, and what are the barriers to full participation in this economy. And so you certainly see that from the perspective of the Biden economic strategy to try to invest in the drivers that are actually going to increase labor force participation, increase the productive capacity of the economy by driving inclusive growth, shared growth, the kind of growth that we think will be durable across time.
Courtney, this is the math be the last one. Go ahead.
Right back here. Hi.
Hi.
I wanted to ask you about infrastructure and the ongoing negotiations on the Hill. The House passed its Invest in America Act, I believe it was either last week or this week. And House Transportation Chairman Peter DeFazio has said that he wants the policy in that bill to be how they flesh out the framework that the president agreed on, the bipartisan framework. Is that something that you would agree with? Is the policy in there what you want it looked like at the end of the day, or are there certain policies you would want to keep in the final bill?
Yeah, so that was a vote that happened earlier this week, and I could congratulate Chairman DeFazio and the committee and the House for progressing that. This is the process. You're seeing the legislative process work. You saw the Senate committee pass a surface transportation reauthorization unanimously out of committee with Chairman Carper, Ranking Member Capito there, and now you've seen a transportation reauthorization pass out of the House as well. And as we've said for some time, the expectation is that the legislative process will now work the way that it has, and as part of the bipartisan infrastructure framework, moving from a framework agreement to piece of legislation. As the president has said, the committee chairmen are going to be part of that process. That process is happening in the Senate right now, but obviously working between the Senate and the House is a key element of this. So I think it's an important milestone, and Chairman DeFazio has shown extraordinary leadership on this issue, and we're going to keep working on it. This is the legislative process in real time, working its will.